I'm Chris Whitehurst, and this is the Terms, Tips, and Tricks for Real Estate. Each episode, I tackle a different term or trick from the world of real estate to help guide you through the journey. Go ahead and subscribe and ring the notifications bell. There's a new one of these each week. This week is episode 74, and we're talking about land transfer tax. This is a part one of a three-part series on taxes. This three-part series is going to talk about the additional fees that are associated when you try to sell your property. The full amount is broke down in your seller estimated net sheet. If you want more information, you can check out episode 47 or the closing disclosure, which we talked about in episode 19. It's important to consider these fees because they impact your bottom line. In North Carolina, the land transfer tax is 1% tax sent to the county where you sell your property. Other areas may call it a deed tax or a stamp tax, and the percentages can be different. In some areas, you may also be responsible for city, state, or federal transfer taxes. Ask your real estate pro for more information. Funds generated from these taxes are used by the county for capital expenditures such as offices, jails, and school buildings. If you like these videos, there's a ton more of them on my website at chriswhitehurst.com. You can also check me out on Facebook, YouTube, and other popular social media sites. Be sure to like and subscribe so you can stay plugged in and updated on all things real estate. Until next time, I'm Chris Whitehurst. Welcome home.